So I wouldn't point to a single factor that could change our assessment. But obviously, our interest rate forecast is a forecast. It's not a promise. And there is great uncertainty about the outlook going forward. If there are signs that inflation will return fast to our target, or if there are signs of a more pronounced slowdown in the economy, that could be causes to lower the interest rates sooner. But the way we see the outlook today, most probably we will keep the policy rate at 4.5% until the end of the year.
I would also like to understand your thoughts on dynamics within the oil market. Ultimately, what I would like to figure out here is whether the sell-off we've seen recently in the oil market, how is that putting pressure on the currency, and ultimately how you think about the outlook for the Norwegian economy?
As we have a large petroleum sector, movements in the oil price matter for the Norwegian economy. It matters for the profitability of our oil sector, and could therefore also have an effect on petroleum investments on the continental shelf. Now, we have, despite the decline in oil prices, got new information that suggests that, in fact, investments on the continental shelf will be higher going forward than we envisaged previously. So we've actually raised the forecast for petroleum investments at this juncture. On the other hand, we have seen, as one of many other factors, a tendency for the krone to weaken when the oil price falls, and that could have been one explanation for the weakening of the krone over the summer, but there are also other factors, obviously, contributing to our currency movements.
Exactly. So let's get into that in a little bit more depth, really. When you think about the outlook for the krone, what sort of levels are you working on under the assumption at this stage? Because you have these pressures from the oil market, but at the same time, you have your colleagues in other central banks already starting a rate cutting cycle, and that is also putting pressure on your currency. So how are you looking at all of these different factors as they play out in the currency space?
Now, we do assume, and that's assumed in our forecast, that the policy rate differential, or rather the market rate differentials, matter for the currency. So in isolation, lower interest rates among our trading partners do pull in a direction of a lower interest rate also in Norway because of the potential effect on the currency. But our FX forecasts as such predict a fairly stable level of the krone from today's level. And that's a way of approaching forecasting the currency that we have used for some time, as we believe that will give us the most robust forecast, as there is large uncertainty about movements in the krone exchange rate going forward.